Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording a few minutes before the close here on Friday, March 7th. My name's Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi, and today's show, the theme is the quick and the dead. After this week, if anybody's familiar with the movie, it's a Western, but the theme is apt. If you're not quick in this market, you're dead. And let's talk to our resident ninja, Barrie, about that. Tell us about the trading this week, Barrie.
You had to be quick. How about that? I'll give
I
you
mean,
that.
you and I were just talking. If you like paused for a second on a trade setup, it was
Yeah,
20 points in the S&P you lost. It was already moved 20 points.
absolutely. You have to be really quick, nimble.
Yeah,
Yep, yep. Well, it's one of those times, right? We come into these periods every now and then it'll fade away at some point.
right. So the key thing is if you don't have to think. If you see your setup, you take it, right? If your system follow your system, you take it. You don't think. And that's part of what we'll talk about at the end of the day, but at the end of the show. But let's get into it. Well, lo and behold, there we are at 57.50.
Sure enough. And let's pick it up at with the cash.
Mm-hmm.
And more than 57.50 is the 56.73 that we talked about last week.
That's true too. Yep.
And we talked about how we had structural support. We had support here, and we had it on the board. And sure enough, the low today, yep, 56.73 was right there.
Right there.
And so very good. Now, I guess the question's always on Friday, well, what's next?
Mm-hmm.
So what's next looks like some kind of a counter trend because we didn't quite stop at the 270, which is 45 degrees down from the high, roughly. We went a
Mm-hmm.
little below. So the markets are definitely weak. It really, really pushed find the buyers and they stepped up right around that 56.73 area. Now for next week, what we really want to see is if we can settle above 57.50.
Mm-hmm.
And consolidating here would still be weak. I think I would consider that to be weak. And we could roll over. The way we can get out of that is really to get above 58.48. This is all basis daily, right?
Mm-hmm.
So we really, without getting up above 58.48, it's a little hard to get all bullish about this. Not after,
Right.
not after
Right.
what we've been through. So, so that's kind of how I'm looking at it. So 57.50, first of all, can we even get above it? Okay, great. If we get above it, can we sort of stabilize above that? And
Mm-hmm.
from there, can we move higher? So until we really get, and I guess it depends on the pattern, how we set it up. So we can talk about it in another 5 days, next week,
Sure.
next Friday. But in the meantime, what we want to do is just look at the levels, regardless of the pattern. If we can get above 57.50, great. If we can somehow move above 58.48, then any pullbacks that hold above 57.50, any counter trends that hold above that, I think it's fair game, and we might have a little bit more left of a counter trend rally. That's kind of what I'm saying. We'll get a little bit more into the details of it as we go, but that's the opening shot um, based on the cash chart.
And in
So,
bigger picture, we're saying, okay, if that was the end of the first push down, now we're looking to see, do we get a lower high on this counter trend? And if we do, that could set up sort of what we call the fat pitch setup.
yeah, of course, yeah, and that could
A
set up in a couple of days, might take a few
couple
days.
weeks, like, who knows,
hmm
right?
This wasn't exactly a blistering sell-off. You know what I mean? There wasn't a whole lot of fear, a lot of uncertainty, looked like anxiety,
Hmm.
because we didn't just slip and gap down, right? We were down and up a little and all these intraday rallies in between,
Hmm.
a lot of whipsawing going on, wide range. So it seems like it was kind of very technical,
Hmm.
which means we could probably see that kind of a counter trend also,
Sure.
meaning more of a technical one, right? Not
Mm.
so much about sentiment. We'll see.
We'll see.
All right, let's take a quick look at the futures.
Futures.
So here's our futures chart. And well, if you guys are been watching this, you know the story all the way from the high, well, the original high back in November. And we kind of walked through this entire path and we got the break. So this 90 degrees was the big deal. We broke through that. It went next to the, normally we, you know, talk about going to the next half square, which we did 50%. And today we did below and reversed. And if you really look at that hard, we came to the quarter of the square, right?
Yeah, so we went up 2.5, down 1.25.
Yeah, exactly.
Hmm.
So that's pretty good support. And I think it's a fair place to stall out. I think one of the things we want to watch is this trend line and to see if the counter trends come up and stalls against that. And also 1 by 2 coming off the low. So all of that kind of is setting up around 58.50, 58.60, this area,
Hmm.
to see if we go up there and tap it and unable to get above it. So, really unable to get up, getting above or settling above 58.50, 58.54. Basically, this line, you guys can draw this and see, that's kind of the key we're looking for. See if we can get above that. Just settling about this 50% would be kind of rather positive, I would say. That's
Hmm.
57, 57. Let's see if we can do that. We do have some overhead now that we kind of broke through. So even 57.90, this area is going to be a little bit hard to push through. We'll see if it's going to be a grind or what. So far, we've been bouncing pretty strong off of support levels, but just to be sold again. Right?
Yeah.
The whole week was like that, up until this last rally. So let's see how that moves. But I'm just kind of giving you guys some key levels and why those levels, while we're looking at those levels. Here's the continuation chart for the E-mini, the futures chart. We looked at the cash in the beginning, and sure enough, we had this 56.82 as the support level, and I had this zone drawn out. Well, that was a while back, but you can see how that level was still legitimate, right? We came right
Hmm.
down into that area, 56.82, reversed pretty hard. That's a decent reversal. And this morning, I posted about a possible sort of a flush or some kind of a spike down, and it feels like that because we really broke out of that range we've been messing around with most of the week, and we managed to get pretty well above 57.50, so 50 30 points above right now, and
Hmm.
not a bad acceleration, right? Not bad at all, 100 points. so
Hmm.
so so which means we had a strong swing off of that. Now we have to see what's the continuation like. Again, we really, at least on the, we talked about I'm talking about the front month, using the front month, and this is the continuation. So we just use it for the larger picture. So 57.50 is like the key level we want to watch here and see if we can settle above that. We have 58.92 sitting above, but that's a little ways off. So we'll see. But stalling areas are those are sort of the potential stalling levels we talked about
Hmm.
earlier, looking at the front month and here. Yeah, yeah. And let's take a quick look at the Dow. So Dow managed to recover the 216-degree level up from the September, October lows.
Hmm.
And again, we broke this triangle to the downside, um, did pretty well, and we stalled out right at the zone, the support resistance zone we had marked. And at the time, we talked about it stalling about midway, how far we can reach up before we sort of break this expanding triangle. We broke it to the downside. I think the upside's pretty much the same. We got to look around 43, 550, 552, all the way up to 43, 723. See what's happening there. That could be the resistance level. Ideally, it would be that or lower, right? If the market is weak. Um, yeah, that's kind of what I have for that. It's pretty clear, right? Not
Hmm.
much. Okay.
Yeah.
And this is a calendar day chart. Again, this is coming off the October low, is 270 degrees. I mean, that you can see it's very clear. You can see the line. We kind of managed to get above it. So you can think of this like my 200-day moving average. So
Sure.
if you break this and get stuck under somehow and just can't really settle above peacefully, then I think we have trouble, and the market's probably weaker going into the probably towards the end of the month, maybe second, third week, right?
Hmm.
So we got to watch those levels. I think that's the big job next week, is to watch where the counter trends go if we get to that. Otherwise, we already talked about where these counter trends could sort of tap out. Well, we talked about that, but even if we might not even get there, which means this 57 kind of a level is the key. Because if we get under that, can't really get above, then surely we're going to get down to 55, what is it, 55.80, this area. This is the base of the futures front month. All right. So now we're in the race. We were waiting all this time and now we're in it. So
It's running.
it's running full speed. All right, let's take a look at the weekly chart. So this is the weekly futures chart. We hammered, I mean, I don't want to go back and talk about this because we talked about it so much, so many weeks. And I
Hmm.
think you guys already know the story. It's all squared out. We were looking for some kind of a break. We finally got it. And sure enough, even on the weekly, we had 56.72. You guys are watching this. We've had this on the board for a while. And sure enough, we came installed. Now on the weekly, not so easy. These 225-degree levels are on 5,800. So we really need to lift and get on top of that.
That's big.
Yeah, it's kind of big, and all at the same time, you can see there is some massive overhead, man. This is no walk in the park.
No, that's a
There's a
couple
price to be
months.
paid for that. Yeah, exactly. There's so there's a price to be paid for that, and that is this tremendous overhead now. So let's see how we handle that. I can see a spike or two up in here, but boy,
I mean, the last
that's
time
why,
we had overhead like that is if you got to go back to 21 or 22 when we broke below the 135.
130. Yeah, yeah, exactly, exactly. You mean over here, right?
Exactly,
We
right in
stalled, yeah.
there.
Hmm.
Yep.
Yeah, we tried to come up, and that's pretty much all we could do. And then boom, we went for that final low.
Hmm.
So here, I think there's a lot more downside to go. So, but we have to obviously deal with it week at a time. That being said, not being able to really settle above this 1,500 level basis, that futures contract, it's definitely weakness. And if we can settle above that, great. Let's see what kind of a counter trend we have. I mean, I would love to get a nice lower high coming in, around 6,000 or so. 59,
6,000 would be
yeah.
glorious.
Little too much to ask probably, but
Right.
let's see how it all works out. For now, this is what we're dealing with. Again, longs are below these key levels that I already talked about. You guys can go back on the tape and look, like 5,800 here, basically weekly. It's on weak legs. I don't care how well we bounced off of it. We really need to be able to settle above those levels.
Hmm.
And the other thing we want to watch is to see if the key levels that we were talking about, we were expecting the market to stall. If they hold out on these counter trends. That's the other. So here's another chart. This is a square of the low from 2009 low, and we've been talking about this for about a month or so. I remember putting in this little box. I don't know if you guys can even see it. There's a little box there. Like if we're gonna get a turn, we should get it within that zone, right?
Hmm.
So fair enough, we got it pretty much in the middle of that. And that being the case, I really don't think this is just like a 2 week downturn and now we're back on the bull run. It just doesn't end like that,
And
especially
too
after
many,
this.
too many big cycles, man. Too many.
Yeah, too many things. It took too long, held up for too long, and propped up, however you want to call it. So, all things have to somehow work out naturally.
Hmm.
And either you pay with time or price. So here, plus we completed this big ABCD. There's definitely more to go. What's kind of concerning and maddening, what kind of could get maddening, is expanding triangle here based on the weekly chart. I'll draw it here because it's easier to see.
Hmm.
But if you look at that, oh boy, are we going to be, in for a
Oof.
ride. You talk about quick and the dead.
Don't
So
don't sell breakouts there.
yeah, this could get nasty. So watch I mean, one way to look at it is a balance point. Look at the middle of that, and you can take the high and the low and take the 50%, right? Throw it on there
Hmm.
and see how
Hmm.
we do there. But keep an eye on this because if this grows into a bigger theme, it could really throw a lot of people off. So
It'd be whippy heaven.
yeah, yeah. As if this week wasn't enough, right? And speaking of this week, so here's this week. We started on the third, and we started up at 59.86 was the key level we had to hold above or not. Otherwise, we're looking on the short side to the weaker side, which sure enough, we tapped 6,000. That was on the board before we got there, and just failed this. The simple trend line break would have done it. So After that, you guys can see we were just down all the way. Then 58.07, we wrapped around a few times. You can see we was in a 90-degree box right around the
Mm-hmm.
midpoint. And just when that was kind of becoming a mean reversion, we managed to come up here, do a little false break and break out of that range. And well, then we went and really tested the lows. So you can see, that's, if you take these lows, this is kind of where we stalled out today, right?
Mm-hmm.
So let's see how that works out next week. See what else I want to say. Well, and today, 5760 area was really important. We couldn't do it in the morning. Went through a couple of important levels, 5717, went all the way down to 5670 is what we had on the half hour instead of 73 or whatnot we had on the other chart. And we, within 3 points, not bad. Day like today, 100-point day.
Mm-hmm.
And then we got a good bounce, which we were expecting a rip in the afternoon. And so we managed to sort of clear this 5760, but this really is the area to sort of watch on the shorter time frames. So this 5760 to 70, if we can hold above this zone, we can maybe take a shot at 5807. We really have to clear this to get any, decent anything happening to the upside. And 5850, we looked at these numbers on the daily, so they're way above. And you can see it's been a good, I don't know how you'd call it, like a good bear market, good
Mm-hmm.
downturn so far. If you just let's say if you just draw a if you just draw one by one, you can see
The slope's been good.
slow's been good. Give me 1 second. As chaotic as it is, you can see how sort of organized the whole thing was to the downside if you just look at the extremes, right?
Mm-hmm.
Most of it was contained. If you take this low and that high, it was
Mm-hmm.
all contained there, all very orderly, all very bearish. So that's the whole point. We really have to, I don't think we squared it out in a big way. I'll check it over the weekend again, some other tools, see where we are. But for now, we really haven't had, like when we're looking at the daily charts, we really did get a decent counter trend on the way down, right? It was kind
Mm-mm.
of a controlled demolition. So let's see what the next counter trend looks like, and that'll help us figure out, what's happening. We'll take a look at that. What else do we have? Well, here's a weekly. This is a weekly cash chart. We've been watching this for a while. I think last couple of weeks we've been talking about this 5950. If we slip that, then we're probably going to go down and test the 50% level, which is 5574. And didn't quite get there, but we're definitely going that direction.
Yeah.
So next week, we could bounce a couple of days and go back and wrap this up around this 55, what did I say, 5570 area. Is something to watch. This is, we talked about the expanding triangle, so that's happening. But you can see how rock solid the roof here was, man. We had the ABCD, then we had the 240, then I had this geometric line I've been kind of rattling about every week, and we really never took that out. If you notice, we tap a few times, and just momentum just kind of lost out, and we just rolled over. Now we have to see. We have a bunch of lower lows. Let's see if we can stop putting some lower highs. And the reason I talk about that is, if you guys remember, there were a lot of really important cycles, big cycles, monthly cycles, all kinds of stuff expired in the last couple of 3 months, and not just in the S&P, but NASDAQ and some of the individual stocks. We did a tech stock sort of a tear down a while back, a couple of weeks, 3 weeks back, maybe a month.
Yeah.
This year for sure,
Yeah.
right?
And
And we've
it's a
Mhm.
lot of those flagship stocks squared out on monthly, weekly basis. Big ones.
Right. All that means is there probably a lot more to go on these, and it'll be fun to watch how the news cycle kind of starts to justify all the price action.
Mm-hmm.
We'll see. We'll see. What else? Well, so we've been kind of focusing on the bearish side the entire time. I have been so far.
Mm-hmm.
What could be on the bullish side? Well, if we can some of these levels that I talked about, if we can take those out, settle above in a constructive way, well, sure, maybe we can have a little bit of bigger bounce. But I really don't see new highs in here anytime soon. So, and we were talking about this morning, right? Probably not even possible till June. So, but we'll
Yeah.
take it. But
Yep.
that's just kind of talking. But let's take this technically week at a time, and look at it a little bit. So those are the levels, and that's kind of my wrap for the S&P. And you're going to cover the NASDAQ, so stay tuned
Yep.
for that in
Yep.
a little bit. All right, let's move on to the fun stuff. We got bonds. Bonds, well, look at that. How do you like that? We called this out weeks ago.
Yep.
Um, Major resistance 119.16. It's been on the board. If you guys have been watching, you know that was there. And I put in the ABCD as soon as we started making the little triangle,
Hmm.
saying breaking that and breaking above 45 should take us up into the ABCD
There
in
it is.
1916. And there it is. And just like clockwork, we came back to 45. So now the big test is, look, everybody's concerned about bonds and then Trump putting everything else. If we can manage to hold above the 45, guess what? Oh, there's still some strength in it, and we can probably go
Yeah.
up and challenge this area again, or somehow consolidate here for the time being, and we can figure out what to do from there. On the other
I
hand,
mean,
if
you
we,
got your perfect box with the levels right there.
yeah,
119.16 on top
yeah,
and the 116 on the bottom.
yeah, and we have 16, 13, 16, 12 is the 45-degree level.
Hmm.
So there's your middle part. So if we lose this 12, basically yesterday's low. If we lose that, then I think we have a much bigger correction, and the bonds are going to get weak in the knees real quick if we
Hmm.
get below this. So for any strength, even if we take a one dip and come back, like bonds normally like to do, like they did over here, it could easily just dip a little. But those dips need to reverse in a hurry. Otherwise, if we get stuck under here, it could further weakness. That's kind of how I'm seeing it. But it was beautiful this week to watch this hit the number perfectly and then settle. I guess yesterday settled on the 45. Today they tried to move it a little higher, right? Off 45
Mm,
didn't
they
didn't quite
did.
work, and
Mm-mm.
and came back. All right. So what else? Let's take a look at the weekly. Weekly, well, good enough. We went back and tapped the 144, which we talked about last week. Well, after we took off from the 14, the next up was obviously the 144, the full square, which is around 140, 119.16. So there you go. So there's that. And you can see this is no lightweight square. So it might not be that easy to settle above that. So we'll see if we can or not. But in the meantime, we're watching to see if this week's low gets taken out or not, or at least Thursday low, like we
And
talked about on the daily.
I
Mhm.
think the important part here too is if it can settle above it, it's significant.
Above here. Oh
Yeah,
yeah.
above that
Hmm.
144. It's big. So watch
Yeah, it's
that.
very
Know
big.
what
It's
know
very
what that
big.
level is. Watch it,
Hmm.
and that'll be your marker for bonds. If you're below it, things could get a lot weaker. If it gets above it, then things have changed.
Yes, and also, just to sort of lend to that is the fact that, we made the low, back in 23, came up to a high, low, and a higher high. So we have two higher highs in here, and we have a low and we have a higher low.
Hmm.
We have we have a higher high, we have the low, higher low. So really the next leg is really what happens here. You know,
Hmm.
are we going to get above and go up into, put in a third high in a row?
Yep.
Or are we going to fail here and then go on and reverse this higher low business and
Right.
start making some lower highs, So it's kind of a pivotal moment here.
Yep.
And it's interesting, right? With all the news and everything. And we bonds just happen to end up right at a key level. We'll see. We'll watch that. So those are some things to watch, I think. I mean, real something useful.
Hmm.
All right, let's take a look at crude. Look at that, man.
Little false break this
Yep.
week.
Came down to 65, 64.75 is what's on the board, 60 degrees down. So this has been our range. And for the last few months, it's been this 30-degree range. Not a whole lot, but the moves have been good from, one side to the other. And I've been talking about, even when we took off here, I was a little bit skeptical, uh, saying that, it'd be great to see a flush a little bit below, not much. Let's go to 60 or even
Right.
61. Just a little flush to break this up. And when we go to the weekly, you'll see why before we make a real run to the upside. And we haven't done that, but we definitely came back down all the way from 79.50 to 64.75 level, 65, let's say. And we did really nicely at 73.50, well behaved, came down, tapped it, came down, tapped it. Plenty of time, plenty of chances to trade it to the short side, plenty of chances here to trade at the upside, plenty of chances to get traded short from here to the 73. So everything's been working well because we're range bound, and it's a decent range, right? Not huge, but
Mm-hmm.
good enough for crude. And so now the question is, is that 30 degrees enough? Because if you go from the high, we did exactly 30 degrees down.
Mm-hmm.
And so we'll wait and see. It's a little too early. We didn't quite do 30 down. So let me see, check that real quick. So 30, we definitely have 36, but we have price there and didn't quite get below. So we'll see what happens next week. It's kind of a critical area. You can see 30 is important to crude. So we'll
Mm-hmm.
leave it at that. Let's take a quick look at the weekly. Well, here's our big circle. Obviously, that one didn't fire off. Worked up until here,
Yep.
and then that was it.
But
So
notice when it broke, how it went after it broke out of the circle, it collapsed.
yeah, yeah. So one couple of things. One, this trend line, it looks like a false break, even if you take it from one of these highs. This high
Mm-hmm.
is still a false break. False break came down. So I'm guessing, normally if we're going to false break to the upside, we should go and put new lows down here on this line. So this is why I'm thinking 61 level will be great, because then we'll actually come and fill that little area and start up whatever the next thing is. That being said, boy, this sort of sideways compression is going to break out to one side, and we know it's not going to be the downside. So we'll keep a real tight eye on this and watch us every week, and we'll catch it before it happens.
Mm-hmm.
But watch crude, because let's just say it's circling about, right?
Mm-hmm.
And you can see where the six. So the earlier we are looking from 60 from the high on the other daily chart. So here's 60 from the low.
Mm-hmm.
We did a 120 for that high in 22. So perfectly in the middle, perfect place to really lay it out and continue a bull market. So all this stuff is there, but nothing like breaking below these levels to like convince everybody. And that would be great if that happens.
Let's see how it plays.
Yeah, let's see how it plays out. All right, let's move on to gold, which, after the little square that Ben mentioned, we were squared out 90 by 45. So we have a lower high. That's what we have.
Could
And
do an ABCD down.
we could do an ABCD down, and whatever the case, we have a lower high. So gold looks a little weak unless we obviously take out these highs. So up until we do that, we have to treat it as if gold has a high in place.
Mm-hmm.
You heard it here. And also you heard what you're going to hear is that above 28, 27 area, gold's very, very strong. You got to watch it for impulse moves. So it's kind of a weird place to get trapped. We square out here, so it's probably going to go lower until we get below 28, 27. It's probably not going to have any big momentum to the downside. Maybe like, short, quick moves, but nothing major till we get under that. And even then we have this 27.78 area coming off the high, providing good support. So gold might not be as strong, and we might trade it a little lower, but it's not out of the game by any means. Is probably the best way I can put it. That makes sense?
Mm-hmm.
Yeah. And the reason why for not being all this, giddy up bullish about gold is because it's 120, 120 week count that topped out gold. And for next week, it's going to be kind of easy. We have inside bar, so watch for the lows to get taken out or highs to get taken out. Might be some short term trade or some kind of entry to the short side if you guys want to trade that, with good support right around 27.97 basis the weekly. There's structural support there. And I mean, it's all bullish up in here, but you can just take the measured moves past corrections and you can kind of see how much this might do or if it overbalances or not. But for now, everything seems kind of quiet on the gold front.
Mm-hmm.
Silver, uh,
Sideways.
yeah, yep. And we're up 90. So I think we talked about this 90 being kind of important.
Hmm.
It's 32 is really the level you want to watch. But I think times like this, when we started going sideways a lot, I always like to go back to the basics and see what happens if we
Take it
take it
from
from the
the
low.
original run.
Yeah.
Yeah.
And there you can see silver did this amazing sideways before we triangulated and broke out.
Yep.
270 is where it got stopped. So looking at the basic pattern, we basically really want to hold about this 50% of the square,
Hmm.
which happens to be 3150. So 3150, 32, no matter how you slice it, that's kind of where you want to be watching.
And you can
Longs
see
were,
buyers are stepping in there too.
yeah, yeah. I mean, look at it all. This is an uptrend, no matter how
Hmm.
we've had that. Of course, since we had this last high and we're between those two swings, but the basic, direction is high. I mean,
Hmm.
going higher, moving higher.
Hmm.
Yeah. So metals look solid within reason.
The resting,
All right, let's take a look at copper,
which did a little false break this week.
but it's holding pretty solid, man. I'm
It is.
impressed.
Yeah.
So just for the record, we've been bullish copper, God knows how long, and and it's moving higher, thank God. So
Hmm.
so there's that, and we've been also really watching this level, 60 degrees up from the low back in 22. 405 was the level we were watching, had a little false break. We called a low at this point, started moving higher, and we were waiting for to get set. So this is a great example of holding about 50%, right? We
Hmm.
ran up above, came back, stalled here for a long time, really. But
Hmm.
after the false break, so that you can call it a false break, we did a triangle and broke to the upside. So it looks like we're marching, I don't know, pretty well. This could be a false break, sure, but we got a ton of structural support now, right around this 460, 460, 463, this area, 65. You hold above that, I think copper is definitely going to go test the old highs in May. Otherwise, probably somewhere above 450, come back and retest it. Um,
The really cool thing about this chart, Barry, is in May when it squared out at that high, we called it and it hasn't collapsed, but look at the price action. It's just kind of burning time now because that
mhm.
cycle ended.
Yeah, so here's a good case of it, letting off the steam through time versus price, right? So
Right.
it's a good solid sideways. So we'll see. We'll see how that works out. So far, it's been pretty good. Now, if you go to the low in August, you can see we have a little bit of a square here.
Yep.
So
And
a
a
little
false
bit,
break. So
yeah, a
watch
little
it.
bit of a cause for concern.
Yeah.
But still, it looks good. I mean, this is not coming off the original, low back there, but I'm moving it up to updating the
Sure.
square
Sure.
August. Even with that, I mean, longs were above 50%, it's very bullish. But like we talked about earlier, this triangle, 50% came in there. So we'll see how that works out. But I think um, even using this, so 50, I said on the other chart, 465, right? 463, 65. So that ends up being about the three-quarter square here. So 463, 462. Pretty much the same thing. The chart's great. So geometry is always there, no matter where you go from. And so we'll watch it from here, but this square is a little bit cause for concern. We'll see if it's going to consolidate and sort of a balance, or we're going to correct in price. I have a feeling the way copper does it is normally in time. So there's that.
Hmm.
Metals have been more active than we'd imagine, right? This year or last couple of years. So here's a weekly copper. We sure enough, we saw that little square on the daily, but we really stalled out probably more because of the square. It's 480 is a 50% square
Hmm.
from the 2020 low. And you guys know the story. We cover this every week. So longs were above these trend lines and levels, especially the 144 level, about 425. Obviously, it's very strong. Meaning, what do we mean by that? We talk about, buying the dips, right? That's when we look to do that until we get to some kind of resistance. So when it gets there, we pause to see what the correction is like, before we engage again. So here's a case where we stalled out, and we're kind of expecting what kind of correction? A consolidation, right? So that's it. Let's see how that rolls out, how that wraps up at the end. Let's move on to the dollar. How about that, Ben? Talk about some movement,
Ooh,
eh? And it didn't come out of nowhere. Here's our 107.25. There's our point, 60 degrees up. Key level. I even marked out the zone. See that little blue box
I mean,
there?
it's perfect. I mean, look at it made a high, pulled back, battled back up, lower high, and then lost the level,
And
lost the
kaboosh.
60 and was done.
Yep, yep. So yeah, the dollar dropped from 107, that zone, right to the 50% level. And now kind of struggling to see, if it can hold above it or not.
That's right.
But it basically came down to the old low that we made on the way
Hmm.
up. So we're kind of testing that. But the rules are rules, as long as we're below that. So in this case, it's 104.05. Let's just say 104, roughly. As long as we're below that, dollar's weaker, we can go a little lower.
Hmm.
We have a little zone here, around 103, 102.85 to 103. That's the next level of support. And we'll see if it can hold it. But we're getting ready I feel like the correction might be ending soon. So we'll watch for that next week. And especially with the euro kind of hitting the right numbers, you know what I mean?
Hmm.
And if you look at the dollar, 60 down to be around 103, 102.75, 103.
Hmm.
So that's what we have to watch. So you guys have the dollar part. Let's look at the weekly. Well, weekly, ever since we hit the resistance up here, and the next level was this 106.75, the 50% level. We kind of got through that, leaving us, well, with the not much. We we could come down weekly, all the way down to 0.62, which would be
Hmm.
90 degrees up. So that's a possibility. Let me drop so going from the high, if I drop a 90-degree square, then 90 down will be exactly right about where price is heading, which is about
Hmm.
103 and a half. And
Hmm.
I think, if we can hold above that, it's fairly reasonable. It'd be a good place to stop. At the same time, you can kind of see how that 90's been acting sort of like a mean reversion point. So we have to watch out for that. Be careful and watch that. So let's watch 103.50, see if we can settle above or get under and do some kind of a search and destroy pattern. But now that's kind of what I have in the
Okay.
high. So that's the weekly. Let's go check the daily euro. We got
Big move.
big move, got right into the 108 level that we were talking about a lot,
Hmm.
back last year. And well, the big question now is, can we get above that and try to make a little bit more of a run or
Hmm.
not? And we might be able to. Let's see. I mean, we are making higher highs and higher lows. We broke the triangle to the upside. So yeah, only problem is that we closed pretty much on the 50% of the square.
Yeah, it's
So
got
I
to
think,
clear it.
yeah, and I think for you guys, if you want to remember, easy way, just watch the high and low, Friday's high and low for next week. Box it out, put a bracket in there, and whichever side it clears to, it probably has a little bit more to run.
Hmm.
And if it doesn't, then it'll go the other way. And watch the dollar kind of balance it out. Should work out pretty well. Let's take a look at the weekly. Weekly, we're kind of back to the sort of that triangular pattern and the false break. Remember that? The false
Hmm.
break to the upside came down, and that might have been a false break, or we're doing a one big consolidation. But the same pattern that we saw in one of the other markets was this possibility of, we've been having lower lows. The question is, are we going to have a higher low here? And I think
Hmm.
the answer is probably yes, but let's see how it's going to, form itself. I think breaking this little triangle, the move up was good. That might be all of it, for all I know. Again, this 108 level is what we have to settle above or not. And you can see, it was a mess last time. But every time we settle above, it was good for 1 or 2 weeks or even more. So we're going to watch it next week to see how we settle before we take any more action, because we did have a good run. Now we're stalled at a key level that we watch sort of as a balance point. So, but that's what's happening there. Natural gas, well, we need to get over about this 440 level.
It's stalling. Yep.
It's stalling there. We tried a few other times, but if we do that, I think then we're on to the new square. Consolidation part and all this bottoming might be over, which is already looking like, right? After the square down to
Hmm.
the quarter of the square correction. So
Hmm.
it looks good. Let's see if we can break up and move a little higher. Only other thing I have is the Hang Seng, which pretty much marching exactly the way we expected. I think last week we said if it can hold about 22,709, 710, that we can expect it to go up and challenge the 144-degree square and make a new high. And sure enough, man, we not only did we do that, we gapped above and held above for 2 days,
Cleared it. Yep.
cleared it. So, so Hong Kong's running a little hot. 23,864, it's the 144 level. And long as we can hold above that, it's a bull market. And we've been calling it a bull market ever since these lows came in, especially after the false break here and the higher low. The higher low is where we started to really track this. Had this first move up,
Mm-hmm.
nice little correction, and here we go. The false break here. I'm sorry. Yeah, that was there.
Mm-hmm.
So everything looks good so far, and we did make the 144. So let's see how we do. We did do a 36 from low to high, roughly. So a little correction might be in order. So we'll see how it
Mm-hmm.
does that. Anything above like 23, 643, 645, giving a little buffer. Hang Seng's in pretty good shape. You'd think like some kind of a correction is in order, right? But when this market runs, the consolidations are pretty tight. That's what's happening there. Well, that's all I got. How about that? Back to you.
Nice.
Thanks. Let's take a look at
Nice
the
work for a chaotic week.
man, what a week. And not every market was so chaotic, right? Some trended nicely and the S&P was, well, like we saw, it also trended, but more like a crazy man, right?
Mm.
As
Yeah.
opposed to like let's just all the sellers get together and make this orderly. Nope, nope.
It's like a crazy drunk going down a staircase.
Exactly,
It's moving
exactly.
down, but it's not
Hmm.
very smooth.
Yep, yep. And violent. So anyway, so we'll see. I think we're in for more of that. I don't think we're done with all this crazy yet. So, and we
Mhm.
talked about this coming up last year. We said, hey, next year is going to be a doozy. So watch out just from the cycle wise. So, and here we are. All right. So let me put it back to you. Let's cover the rest of the good stuff. Boy, talk about saved by the line right at the
Yep.
180.
Yep. I mean, the beautiful thing about this chart is, you can see level to level, and it gives us a spot to make, judgments about what's most likely to happen. Like, where are the
Hmm.
probabilities? And we
Hmm.
said last week, if we get stuck under 20,642, we're going to visit 19,925, and there you
Sure
have
enough.
it.
Hmm.
And you can see there's been a lot of activity here, a lot of support. It's the 180, and we closed near the high. So this probably is going to hold. But you know what I looked in this entire move down, there was not one up bar. You had an outside bar here.
Hmm.
Everything else was inside or down. So that was there was if you weren't in, it was tough to get in, if you were looking
Hmm.
daily basis. For now,
Right.
again, the key levels this coming week. On the downside, support is 19,925. On the
Hmm.
upside, if we really want to get things going, we got to clear this half square, this 50% of the square.
Hmm.
But it's looking more and more like, this high that we called out is good. We have the lower high, we have a lower low now. So now we're going to watch the counter trends to see where we can catch. If we can only get to here, that's going to be really, really weak, right? If we can't
Hmm.
even touch this overhead, we could even get up to here and still be weak because it would give us a third lower high. So things are not looking super bullish in the NASDAQ land. Now it looks like we put in a decent low today. Now we watch and see if we can find the next spot for the failure of the counter trend.
Right. Well, that 20,642 level doesn't look too bad on the daily.
Yeah. Yep. On the daily basis, that's the one to watch. That's the first test on the way up.
Hmm.
So we'll see. We'll see if we can get there.
Yep.
Let's look at the weekly. The weekly again shows the beauty when we clear a square. All this time we were like chopping back and forth across the square, right? Even
Hmm.
last week we were straddling the square. This week the high couldn't exceed it, and look what happened.
Yeah.
Really strong push down. So another marker to look at is the 21,000 level. If
Hmm.
we get stuck below 21,000 this coming week, which is about 800 points up from where the close, if we get stuck there, 18,000 is the area where we're going to see next.
Mm.
That'll be the magnet. The square out high here looks good. And this is the stuff we look for. Confirmation once it comes in, we look at the price action. Lower high, now lower low. Now we're getting instead of sitting on top of levels like we did on the way up, right?
Hmm.
We're starting to get stuck under. First time we got stuck under a level right there. So now we watch and see. Weekly basis 21,000.
Hmm.
Same story on the monthly. So far, the month of March, we're under completely, the bar's completely under that level. And again, if we end the month of March where we can't clear, get above 21,100, 18.2 it opens up.
Hmm.
Let's look at the calendar day chart because I think this one's a very interesting one. We got stuck under here, we poked above, little false break here, and then we
Hmm.
gave it up. Here it's 20,630 is this 50% of the square. Uh, but this is just another view. We kind of were gliding on this on the way down. I don't have a lot positive to say about it until we see first 20,600 clear and then 21,000 cleared on the upside. If and when that happens, then we can start saying, okay, what are the alternative scenarios and possibilities?
Hmm.
Anything else to add here?
No, we're good.
Okay. Let's go to Bitcoin. This is interesting formation, isn't it? It kind of looks choppy wave fourish.
Yep.
So, we had the first leg down, we bounced up, another big leg down, and now we're kind of triangulating here. That would
Mhm.
mean the odds are we're going to get one more push down.
I think so. That 91,050 looks pretty good.
Yeah,
So,
that's a big level, and
hmm.
we've tried multiple times this week, couldn't get above it, and now we're closing right down near this one, near
Hmm.
85 at the full square. I mean, it just looks like maybe we come down, do a false break, test this level here, and then can go again. Or if it fails, then it could get really ugly.
Hmm.
But the key level on the upside is 91,000. Right now, down on the downside, it's 85,280. If we get stuck below, then it's going to be back into the 70s and we're going to be battling in here.
Right.
Let's take a quick look at the weekly. Notice how this kind of, forget about if we didn't have a higher false break high here, looks a
Hmm.
lot like the NASDAQ, doesn't it?
Yeah, it does.
I mean, look at that
Yeah,
daily.
yeah, yeah.
Look at this daily. If this had a higher high, it would look very almost exactly the same.
Hmm. Hmm. True.
It's just from a character standpoint, everyone says, "Oh, this is digital gold and all that." It looks more like a risk asset, like the NQs. But we'll
Yeah,
see. We'll
well,
see how it
mhm.
performs in different environments. That's the daily. Let's take a look at the weekly. Weekly showing a little bit of a different picture. We had an inside bar this week, but we're below 89,540. So next week it's setting up the possibility that, if we can't get a higher high than 89,540, we will have a full weekly bar under this 144,
Hmm.
which would be, have bearish implications that it's going to have to go down, test this 71,000 level.
Right.
Again, the square out was there, the false breaks there, and now we're sort of seeing the confirmation that those things were fairly significant. So we'll see this coming week. Watch that 89,540.
Hmm.
Got to get a print over that, or else it's going to be more negative for the next week. Here's your monthly. Monthly basis, you can see 93,000 is the key. We're not anywhere near that. So a lot like the daily, a lot like the weekly, we got to get up into the 93, into the 90,000s for this thing to sort of get up off the mat. And it's kind of following the curve down, on the
Hmm.
outside. And that is a characteristic that happens a lot of times with these squares. What I'd like to see is it follow it all the way down to here, hold here, and then you could have a nice bullish launch off of that.
And
You
then
know,
come back down to 56.
and then come back down. Sure.
We'll see.
But that's possible scenarios we're watching. Anything you want to add on Bitcoin?
Well, I think it's going to be interesting how this month ends, if we make a new low over there or not. If we do, it kind of looks like a continuation of the trend. So it's going to be important, pivotal month, like they say.
Yeah, and structurally, I didn't point it out, but you can see why 91 is so important because
Hmm.
look at all this overhead.
Yeah, yeah.
That's
Talked about
what,
that last
one,
week.
two,
Yep.
3, 4 months worth of overhead.
Hmm.
So it's at a critical spot. If it can get above it, it can erase the problems. If not, there's going to be the piper has to be paid.
And
All right,
Piper
let's.
always had to be paid.
Yeah, that is true. That is true. The market
Mhm.
demands its tribute. So let's talk about commodities. The interesting thing is, again, there's not a lot of good long setups. Barrie covered the metals. He covered crude and nat gas. They're kind of correcting crude. We have some hope in terms of potentially having a long setup with the false break we saw this week. We'll see. It may need to flush more. The only ones I have that I want to highlight this week are corn and coffee. Corn is a long, we've been talking about corn for a while with the grains. Wheat and soybeans are just kind of really sideways and still trying to finish up their correction. But corn, I
Mhm.
thought, did an interesting reversal, so I want to look at that. And coffee is actually a short. I 2 days ago, I think I put out a little quick post on X about, it was a fat pitch setup, looks really good. And so I want to go over and detail that one with
Mhm.
everybody. We don't care long or short. We're looking for good setups with good risk rewards that fit our system. And as I said, coffee is showing the characteristics of a nice short setup. But let's look at corn first. So here's corn.
Mhm.
We've been watching this one, calling out the lows last fall, where we were getting a series of higher lows and higher highs. We broke the big downtrend line from the Russian invasion spike. And then we said this 499 was really important, and you can see why. We were banging up against it. We pushed above it, and then you see we got this sharp sell-off
Mhm.
down below it, and we actually failed when we tried to push through. But look where we found support.
Yep.
It's both structural support, right?
Mhm.
This structure here and sitting on top of this, and it's 50% of the square at 447. And then we
Right.
had a nice, 3, 4 day reversal here. So as long as we can hold this 447 and then get above 499, that could be the correction,
Yeah.
the pullback that we were looking for.
Mhm.
Uh, but we'll see if we come up here and make a lower high. Obviously, that's trouble, right? If we
Right.
make a lower high, can't get above 499, then it looks like we may be going down for another leg. But for now, holding here and reversing pretty sharply 3 or 4 days gives us hope that there's a good setup here. Against these lows, you can trade this thing looking for potential breakout through 499 and making a higher high again.
Mhm.
Because we still have the higher lows and higher highs, so that the structure and everything is good. This was just a sharp pullback. Whatever the reason doesn't matter. What matters is, what happened in price action. And price action is we got stuck under, we came down to the half square and we held and
Mhm.
reversed. So that's how the daily looks. Let's take a look at the weekly. There's your weekly. What I like about this on the weekly bar, look at the low and look at where we closed. So it got bought up throughout the week. Like it sharp move lower this week and then it closed near the high.
Right. Right.
And if you look structurally, look at where the low was.
Mhm.
So let's see if next week if we can get a reversal bar up, then we'll have the weekly reversal to kick in. On the weekly, 517 is the level we want to get above, which was this, the essentially the highs right there.
Mhm.
We clear that, then it's next leg up, looking at 621. Take a quick look at the monthly. Again, sharply lower, but look at where the month hasn't closed, but for the week, look where the bar is. Like we got the
Mhm.
close over 463. So 463 monthly basis is really important
Yeah.
because it clears, it gets us above this and gives us the opportunity for the next monthly bar to clear, and push higher on a monthly basis.
Hmm.
So let's hope that this has just been a flush, sort of shaking people out. Any other comments you have on corn?
No, it looks good. Perfect. We ran up, nice little correction. I think the trend is up. It's funny, the commodities are bottoming while the stocks were topping out last few months. So
Hmm.
let's see how the pattern continues.
Okay, let's go look at a commodity that I think has topped out. Let's look at this one.
Was on fire, so makes
On
sense.
fire. It was on fire. And that's coffee. And we called this thing, this run up, right? And look at this. This was a huge run up into a square.
Yeah.
And that's so I noticed that. And
Hmm.
I think I went on Dale's show when I was being interviewed by Dale Pinkert. I
Hmm.
talked about how, be careful with coffee. It had a great run, but we squared out. We got to watch and see
We have a lower high
how,
and all that.
right, how it plays out. Well, so we had the high, sharp pullback, came right down to, the full square support, rocketed up, but then made a lower high and failed at the full square.
Mm-hmm.
And that's when I posted on X. I think it was yesterday morning, if I'm not
Mm-hmm.
mistaken, or the day before. I said, "Hey, there's a fat pitch setup here. When we reverse on the daily, which we did,
Mm-hmm.
I said this is the lower high. Worst case scenario, let's say it just does an ABCD down. That takes us to 355. But if we're catching, the second leg here or the third wave, as some people call it, it could be a big one. And,
Mm-hmm.
depending upon what extension it does off the first wave, you're looking at like 320, 280 in that area.
Right.
And so this is a trade, and we know we're wrong if we get back above this half square. You're done. You say shouldn't be back up there, shouldn't go back up and visit there. Otherwise, the risk reward is huge.
Yeah.
And that's the setup that I saw. We had the square out, we have the lower high, and now we're pushing here. If we take this out and get a lower low, as I said, worst case scenario, you do an ABCD,
Mm-hmm.
you take your profit there, or it really gets going and, comes down to the half square here, or even in this area here.
Haskell would make sense if we can get there. That'd be great.
Mm-hmm. Right there. That would be around
Mm-hmm.
321. Let's look at the weekly, and you can see the setup on the weekly. And the weekly is interesting from the standpoint we did from the a January 23rd low, week of January 2023. So it's right in here. From
Mm-hmm.
this low here to the high there, we did 288 in price and 108 in time.
Mm-hmm.
Squared out, and now we had the first reaction, lower high, and now what I want to see is this week's low get taken out. Right? That would
Right.
mean there was a reversal off that lower high.
Mm-hmm.
And that low is, let's see, what is that? 375.70.
Mm-hmm.
Take that out, then 358's next, and 331 is, in that target area we were talking about. So square out, sharp reversal, lower high. That's the combination we like.
Yep.
Let's look at the monthly. The monthly is interesting because this one has a huge square. If you look at the monthly
Mm-hmm.
from the August 2002 low, like right in here, right around in here.
Mm-hmm.
Sorry, yeah, right in here. This low here, the higher
Right.
low,
Uh-huh.
to the high, we did 90 up, 270 in time.
Wow.
90 by 270, right
Right.
at this high bar. So that's a
Mm-hmm.
major, major square, right? 270 months and 90 in price.
Mm-hmm.
So I think minimally we should correct to here. And if this thing gets going, we could correct here.
Right.
Because if you look, we went up what, one, two, three squares. If we come back 1.5 squares, it's right there.
Hmm.
So all in all, with the squares and the price action on the daily, weekly, monthly, we have a nice setup in terms of risk reward of lower prices.
Hmm.
And on a daily basis, let's go back to the daily. On a daily basis, we have this potential fat pitch up here with the lower high and the reversal.
Yeah.
And that's why I think the setup in coffee is showing that the path of least resistance seems to be lower prices. And we know where we're wrong. And that's the key thing. You have the spot where you know you're wrong, and then you look at your risk versus reward, and it sets up as a nice trade. What's your comments on the coffee analysis?
I'd say it looks pretty good.
Yeah,
Let's see how it follows through. I
yeah,
mean, the
let's
weekly
see.
setup's beautiful, nice, beautiful lower high. So,
Hmm.
but taking out that 366 would definitely confirm the whole setup.
Absolutely.
Hmm.
When that gets taken out, I think it goes into overdrive.
Right.
And the other day, I think it was down 5%. So
Yeah.
it
Yeah.
you can see when the day it reversed, did the daily reversal, it was down over 5%. So you can
Hmm.
see sort of the the eagerness of the traders to get this thing going down again because of the
Hmm.
setup. So let's see. Let's see how it plays out. That's it for me on the commodities. It's another light week. We just have not had the setups yet, but we'll keep watching. And we look both ways. You can, like in coffee, we're looking short here. So if the setups are there for the shorts, we'll call it out.
Hmm.
I think the topic I wanted to, we have about 5 or 6 minutes left, Barry, but I think the topic I wanted to talk about is I made a couple posts on X this week about, you know, what if the tariffs and Trump's announcements and stuff really have nothing to do with what the market's doing? They're just the excuse.
Hmm.
And how do you, because obviously they're a factor because people are reacting to them, they're looking to them, they're looking for them, they're worried about them. How do you take the tariffs, the news, the tape bombs? How do you deal with that in your work? Like what role does it play? Do you do anything differently because the market's reacting to them? What do you do regards to that?
You mean when we have hard news, like on the
Not not
wings?
not like an employment report because that's
Hmm.
scheduled, right?
Hmm.
That's
Hmm.
everybody looks to it, or an earnings release or CPI or something like that.
Hmm.
More of the stuff where it's just some sort of random announcement. But
Right.
it's random, but everybody knows it's possible because
Mm.
that's a characteristic of Trump. He does these things, he announces things sort of spur of the moment, not scheduled. So do you do anything differently in your process or your trading because of that? Or
Yeah,
or how do you handle it? How do you
I
account
do.
for
I do. One of the things is to really keep a short leash on your trades.
it? Hmm.
And that paid off this week because, boy, like you said, talk about getting in a couple of minutes late and getting out a couple of minutes late is the same thing. Then
Yeah.
you have to give
Yeah.
back. You got to
I
give
mean,
back quite a bit.
that gets back to the theme of the quick and the dead, right? You got to be
Yeah.
quick,
Hmm.
right? Or you're
You got to be
dead.
quick or your trade is dead. So
Right.
that's kind of how it works, or it definitely beat up. So I think, well, you have to, one of the things in trading is you have to have your system, but you also have to be flexible
Hmm.
based on, the incoming. So, one of the things is to always watch the radar and see what's coming through. And in Trump's case, or anybody, it really doesn't matter. Remember back when the North Korean rockets were like shaking up the markets out of
Yes,
nowhere?
yes, yeah,
and,
yeah,
and
right.
it's like, oh my God, what happened? There was a rocket fired. Oh, great. So I think those things are always going to be in the air. I think it's part of the, what we have to deal with. But I think the important thing is to make sure you have a solid base system that you enter, and some good management rules. And when the climate changes, let's say if it's a little bit more relaxed, well, then you can. And also you have to watch the price behavior, right? If the corrections are tight and the volume is good, liquidity is good, then you can give it a little bit more room, space to run, and you can manage your stops a little bit better. But if the market is kind of like trading a thin market, right? You can have air pockets, all of a sudden it
Hmm.
drops, then it reverses. So I think in those cases, you have to kind of watch the price action and see, like this week, we kind of got into this week, even before, ever since the high came in, you notice the character. We talk about the character of the
Character
market,
changes. Yeah.
character changes, and the rallies were just like on fire, right? With really fast rips, and then it'll just burn out. Rip,
Yeah, they
burn out.
faded quickly too.
Hmm.
They just couldn't sustain themselves.
So as soon as you see like the first evidence of that, you have to back off a little bit. Say, okay, my entries might still be okay, but I have to really kind of watch, be extra careful on my exits and the management. And if it means getting out when you have to profit at the right level, that's what you have to do. And you might give up some, but that's, it's your way of adapting, right? But the
Hmm.
thing is, it's a little bit general because a lot of it depends on the position size you're coming in with and your risk tolerance and everything else, and the timeline and the time frames you're trading. So our timelines are pretty tight. We're 30 minutes and below. So, and we have the tools that help us sort of manage that, and frame it properly, including fuse lines and the Gann charts that we use. You have to surround yourself with the proper tools to handle, pretty much at least 90% of the environments that we go into. And this is
Hmm.
one of them, and I think forget the shorter time frames. I think even daily basis, this is going to go on. And this is what we were talking about a couple of weeks ago. It just feels like all that last couple of months since the highs came in the techs, were kind of distribution, looks like a little bit of distribution. So we have to really watch that. And so what does that mean? Well, that means, well, we're watching the environment to see if something shifted, and definitely something shifted,
Hmm.
obviously. But
Sure.
we're not talking about it now. We talked about it then. That's the point.
Yeah.
That's the forward-looking radar. You want to look at it and say, hey, things are shifting a little bit. Remember when the three drives came in on the Bitcoin?
Yep.
We saw
Yep.
that, we called it out, said, hey, we have three drives here. It's possible the high is in. Watch for change in character. And Bitcoin was never the same after that. It
Yep.
just, it'll sputter, it'll buckle, it'll run a little down a little. Then all of a sudden, it's just scraping its way down.
So
With all on top of good news, right? Like what
right.
the, yeah.
So I think the way to sum it up, because we're running out of time, but the way to
Mhm.
sum it up is the the news and the tape bombs and the whatever the excuse is come is a product of the cycles and the patterns, not reverse. Right? The news doesn't make the pattern makes the news.
Yeah, another way to look at it, you can say the story is already written and we're just seeing which players are going to play the parts.
And we're seeing it like the story's written, as you said, like the cycles come in, the
Hmm.
story's written, and then you're seeing the slow dissemination of that realization.
Exactly. And then we see the players that are coming in to sort of carry that weight or take the blame,
Exactly. So we'll
Oh,
we'll continue this topic more
mhm.
because I think it's important to help people not get focused on the wrong thing.
Well,
Listen, we
and the really quick, Ben. So the thing is, I mean, your guard safety against all of that is always having, your tools and your system to always back you up. You always have
right,
that to fall on, and the way you use that is how you would manage the changing environment. But you
sure.
have to have that solid base. Otherwise, everything's up in the air, and then then a lot of anxiety, and people can't really focus on the trades.
Listen, everybody, rest up again. It's been a rough week and a busy week, but more is coming. Have a great weekend, everybody, and we'll talk to you next week. Take care, Barry.
Thanks, Ben. Good job. And thanks you guys for all the likes and the shares.